Hey traders, this is Ron Hayden at Market Tamer. Hope you guys are doing great. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed by your financial advisor. Kick off here with the SPY. We have this little bit of a pennant formation going on. We have lower highs, higher lows. You can almost see it with the pennant forming there. Usually with pennants, you get a breakout either up or down, but I think it's even simpler than that. We close above these moving averages. The 20-day EMA in red is on the top. We go back to all-time highs as the target. Right now, we're basically below the 50 in orange, so the target's the 200-day in purple. That's an institutional moving average. If you take a look at DIA, and I zoom in, we get above the 20-day EMA in red, we get above the 50-day in orange, target all-time highs. Otherwise, we know where support is at the 200-day. We already tested it back on the 13th, about 8 days ago. We get below there, that's what opens up, more selling pressure. Then if we take a look at the Qs, this one's a little more easier to see, I guess, if you will. You can see the pennant. I'll try to draw it in for you just in case you don't know what a pennant is. This might be a little helpful. And you're just big move down, relief rally, and then you get tighter, 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 and you're waiting for that explosion, either higher or lower. But again, it's easier than that because these moving averages are sitting right there. So instead of even worrying about the pennant, yes, it is there. A close above the red line, target all-time highs. Otherwise, we're below the moving averages. Bears get the edge, target 200-day moving average. Now, keep in mind, I'm hosting a special event this Thursday. Over half the seats are gone, and I've only sent out invitations over the last 24 hours. This is crazy. You got to register right away. I'll tell you about it in a second. It's at the bottom of the video. But this is what I'm going to show you. The S&P, like I said yesterday, historically goes nowhere for much of the summer. In fact, a whopping 0.4% rise. It's not selling me and go away that the market crashes. That makes for really nice headlines for all these people, but it's factually incorrect. This is what it historically does on average. About a 0.4% rise, 57% of the time. It's not exactly a big move, but instead I can show you stocks that, for example, could rise as much as 27% historically, 16% historically, 13%, and they're rated buy. This is what I'm going to show you on Thursday. This is also what I'm going to show you on Thursday. I'll even give you picture examples. Look at this. Left-hand side, this is what the stock has done, historical prices. This dotted line is the future probabilistic price. It's showing you historically what the stock has done. I'll unveil what this stock is and many more. But wouldn't this be priceless information to have before you consider placing your next trade idea? When there's biases upward, biases downward, and then biases upward. We can be surgical in our precision as a trader. We know when to be bullish, when not to be bullish, and when to be bullish again if we want to. So again, this Thursday, May 23rd, just 2 more days, 12 p.m. Eastern, 9 a.m. Pacific. Over half the seats are gone. We're actually at about 2/3 of the seats are gone. I can only hold 500 people in there. You got to be there to see it. I'm not going to record it, so please register ASAP. I look forward to seeing you there. Everyone will be able to see the top 10 hottest stocks. In fact, I'll give you even more than them, more than those. You can just take a picture of the screen, so make sure you hop on in there. All right, back to stocks. Really quickly, some retail stocks. Nordstrom is getting absolutely clobbered after hours, again, another 10% after just being beaten down the last month. Stock closed at $37.85 as of about 8:17 p.m. Eastern. $34 is the quote from Thinkorswim. Well, I got to go back 5 years for this. $35. We break 35, and that is not a good thing. In fact, let me just show you all the data. That's why breaking 35 would be a really bad thing. On a monthly basis, there's a 200-period moving average. We got support. The next major support, a little bit around mid-20s, and then all the way back down to 10. I'm not saying it's going to get there, but I just want to show you the gravity of what's happening right now. This is really bad news for Nordstrom's. Kohl's was also down today, ticker symbol KSS. If I bring in 5 years, now it's going to be a weekly chart. We are cutting through support like a hot knife through butter. Next target, there is a 200-period moving average on the weekly in purple at 50, still 10% lower after losing 12% today. But then, holy moly, you're talking mid to upper 30s is the next support level. So retail is really getting hit right now. How about Boeing? I was reading an article today I came across, sort of just breezing through it, and I think the article said, Boeing's getting a big bounce or something. It was only 1.69%. That's not exactly a big bounce considering what is going on with the stock. So the idea is, oh, it's a bird strike, maybe still bad, but it's better than having a software problem. Well, that wasn't much of a bounce. This thing is still bearish. It's still below the 200-day in purple, still below the 20-day in red, still below the 50-day in orange. It's all still bad for Boeing. It would need to get above all these moving averages. Then it gets caught in all this arguably called overhead supply, this chop. It really needs to break above, I'd even say $400 before this would truly turn bullish on the daily charts. Lowe's and Home Depot. So here is Lowe's up 1.74%. Nice little move, target back up towards 117.50. And Home Depot, as you can see, they had earnings this morning. They gapped down to the 200-day, defended it. So if I wanted to trade Home Depot bullish, the stop would be the 200-day. We close below 200-day, it's over. Otherwise, when the stock gets above these moving averages, previous all-time highs around 207 would be the target. Google had some questions on this one. There was a gap down, broke the 200-day, reversed, hit the moving averages. Now it's just sitting on the 200-day. Below 1125, we could say support's down near 1,000, but this was pretty choppy. Above 1,200, which is above the 50-day in orange, institutional moving average, and you'd be above the gap down, then the target would be a gap fill. And one last thing, I had a question on what are these little dollar signs on my Thinkorswim chart. Those are earnings reports that are placed there by Thinkorswim inside the profit charts. That's all. So with that, folks, I wish you all the very best. Please register at the bottom of this video, or if you're watching on YouTube, there's a link there as well. And register for this event on Thursday, noon Eastern. I'm not doing another one on the weekend. So this is it. You want to jump in there and get it. And I promise you, within minutes of going live, I will show you the hottest stocks for the week ahead. Have a great day. See you next time.